Welcome back to the channel, Crypto Trend Trader, the quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so we got the breakdown, just like we said. Broke down from our pattern. We got the retest back up. As soon as we came down, found support, put in a couple nice little wicks right here. You'll see the binary pivots gave us a nice flat line support now, just like they did previously right here. We were able to move up off of it. Off this move, though, we came up and we got rejected immediately off the 89. We were able to get above the 8, and like we always say, as soon as you get above the 8, you're going to bounce right up to the 21, take profits at the 21, take the short off the 89, and we are back in a short position. We're still in our short positions on all the other assets, Ethereum, Tezos, Link, Litecoin, Cardano, basically just pretty much everything had a unrealistic run up. Topped out distribution was taking place. So now we're going to go ahead and ride those down to the bottom, extract this easy capital out of the market, and take advantage of all the moon boys out there. Unfortunately, they don't actually spend the time and do the work. That's the difference between this channel. You guys recognize that we're doing actual technical analysis, not trading on feelings and motion. So what we're expecting to happen at this point in time, typically once you break down from one moving average and fail to get back above it and save the moving average like we did here, kept moving up, when it come back down, test it again, consolidate, add it, and this is exactly what we're saying. Previously we had got a bunch of like long wicks and got bought right up off it. Long wick, got bought right off it. That's a rejection of the moving average to the upside. So it means like the moving average is giving us like strong support basically. It's rejecting price action below it to the downside. At this point in time we came back down to it. This was obviously a big pump fake out. We said that. This was someone FOMOing in to the top. Probably some idiot that was just trying to get into crypto and pump it like the stock market that has no idea what he's doing. Is probably going to end up in prison. If you know who I'm talking about, Dave Portnoy. And he got wrecked, and just like all the people that FOMO in, he FOMO'd right out too. And you can tell by the way he's talking and the way he's acting that he basically made like a huge mistake that we specifically talk about in the group not to do. Don't get greedy. You are going to use position sizes, and even as your account grows, still be responsible with your position size, because what happens is you make gains on the way up, and you start getting unrealistic expectations, pumping money in, and you might have started off like him with like 250,000 in the market. By the time you get up to here, you've put every single penny you have, all your eggs in one basket, and now you have $1 million in the market, and then it sells back off. You get wrecked, lose everything, and you're crying on your little Twitter stream with your green hammer about how crypto is not fair. But in all actuality, all that's happening is all the people that bought when the price was low, being intelligent, just are dumping on your face. So it's important that you do not get caught up in the FOMO. You do not change your position size as your account grows. You're responsible with your capital, and you make consistent trades with a similar account size or balance or portion of your account. However you're going to do it, make consistent buys into the market. If you're going to dollar cost average into strength, I always recommend that you dollar cost average up and not dollar cost average down. When you dollar cost average down, you're basically just continuing to pump capital into a loser, hoping one day it wins. You don't go to the racetrack and continue to bet on the losing horse all the time, thinking that one day it's going to win. No, you go to the racetrack and you bet on the horse that wins most consistently, and you bet consistently on it, knowing that it will continue to win consistently until it doesn't. And that is the difference between intelligent investing and trading, and just basically like not doing your research and then just trying to basically turn a loser into a winner. In all actuality, you're better off just cutting your losers and letting your winners run. And that's a perfect example for like Tesla and other things like that. Chainlink up until recently. But I do believe that the market is topping out. We're getting a lot of indicators from it. This is the 4-hour. The rejection's coming down. Our next target is going to be the next moving average. We drop down from the 81, and you'll see we have exact confluence between the 200 EMA and the 200 SMA. So what we'd expect right now is to come down here, find like temporary support on the parabolic SAR, which we flipped over green right before the rejection. That's often a fake out, at the end of a trend. And then you'll also see we have the binary pivots coming in, and then finally the moving average. So our next target is going to be 11,200. For basically a quick bounce, at which point in time you would expect it to come back up and retest like the previous breakdown support, which is going to be our binary pivots, and where we put in all those massive wicks right there. and that's going to come in at the 11,385. So we'd expect it to come down to 11.2, back up to like 11,350, and then essentially just get rejected again, as I do believe this is a downtrend, confirming a downtrend, continuation of a downtrend. And if you look at the Bellina Assassina, you'll see that it has us topping up here, and then the orange moving average has gone underneath the yellow moving average. We made multiple attempts to save that, and that's why this is so beautiful. Look at that. Make the attempt to save it, it gets rejected by the white. Make the attempt to save it, it gets rejected by the white, and then sells off from there. So when I was saying right here that we were failing to get the cross to the upside and we were getting rejected, and then we started putting in this green right here, this was our exact point. You don't see that in an uptrend. You're supposed to see a bunch of red saying that you're at the top of the range in the bearish control zone, but you're not. We're in the bullish control zone, which means that the moving averages, the stochastics, all our indicator oscillators are at the bottom of the range, and typically when they're at the bottom of the range, it signals that we're about to go into a reversal, and then we'll get a bunch more green and continuation, 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 and then finally we should get a bunch of green like this with a hard blue buy, and then we can take advantage of the move when the time is right. But at this point in time, we're looking for key Fibonacci's, key moving averages, and sticking with the trend, entering into trending trades. You can see we have quite a few things going on our chart here. We're basically putting in like this tightening wedge right here, descending, and then we had a broadening wedge as well. We were able to break out from the top, fake everyone out, come back down. We're finding support on it now, but what I would expect to happen is we just roll over and start selling off to the downside. At which point in time, the next target is going to be based on our measured move of the pattern here, right here at the 11,000 range, and then the actual breakdown of our topping pattern here is going to be the measure move, which is going to be the 10,560. But in all reality, we would expect it more likely to come down to the bottom of the channel, as throughout this entire range, we basically were able to make it up to the top of the channel, bounce around in it, hung out above the heart line, hung out below the heart line, did a fake breakout to the bottom, did a fake breakout to the top, and now we'd expect to revert to the mean, which in this case is just going to put us right back down here at the heart line at that 11,000 range. So as you can see, we have quite a bit of like clusters of support underneath us, but at this point in time, there's no reason to think that all of a sudden we're just going to reverse this trend and start moving back to the upside. It is more than likely going to be like a legitimate retracement at this point in time. And if we just want to pull up like our basic Fibonacci, let's say we do one for like this little move right here from roughly that area, we can get an idea as to what we can expect here. And we've already made it down to the 236, bounce it up, and if we fail to hold support here again at the 236 at 11.5, based on Fibonacci, our next target is going to be the 382, and that's going to come in that 10,940 range. So, and the indicator oscillators are not getting exhausted, although the shorter time frame is at the bottom of the range, and we did cross to the upside. It looks like right now it's about to pop off that orange and then sell back off. We'll get a violent continuation to the downside, and then when these are exhausted, we can get a legitimate move back up off of the 382 back to the 236, at which point in time we would expect to get rejected again off our breakdown horizontal supports, and then we can expect to continue down to the 0.5. Anytime from the 382 to the 618, the golden fib zone, we could expect potential support, and then possible continuation to the upside, depending on what happens with the markets, depending on what happens with the economy. But we do try to stay dynamic in these markets and be fluid with our trades and our moves. Best thing to do is not presume the direction of the trend, but rather let the market tell us, and that's exactly what we're doing. We're just going to sit back, let the market tell us the direction, let the market give us clear, concise price targets, great risk to reward ratios, and then we'll enter our trades based on those without our own personal bias. But it is important to have conviction based on your own trading plan, based on your moving averages or whatever it is you choose to do. And if you couple that up, a successful plan with proper position sizing and risk management, and you stay consistent and keep your emotions and your bias out of the markets, you will have much more success than if you just come in here and continually make the same mistake over and over again. I do recommend that everyone keeps a trade journal. Write down exactly why you're taking that trade, and then afterwards write down your all your targets and everything ahead of time. Write down where you take profits, write down why, and then specifically you can go back over time and start looking for patterns as to your winning trades and as to your losing trades, and then you can make your own trading plan even more efficient. The most important thing to do is not try to find something that works for someone else. The most important thing to do is find something that works for you, and then over time, after you've consistently won and make gains on a small account size, you can move up to a larger account size. But in the end, it's all about percentages. It's not about dollars. And the most important thing is to find what works for you and then fine-tune that over time so that you can have success. You can repeat that success. You can measure that success, and you can identify exactly why, when, and where your best trades are going to be made. But keep in mind, the most important thing is to just keep your risk-reward ratio high so you're winning a higher amount per trade than you're losing. So you're cutting all your losers short, and then your small gains and small losses are canceling each other out, and then you end up with just the big gains. And that is going to grow your account over time. And the first time you double up based on your trading strategy and making intelligent decisions, you're going to realize that this game is not that hard. It's actually the most fun game to play in the entire world. But the key is that you have to practice and put in the work, just like any other game you play, because this one is high stakes, because there's obviously money behind it, and you're not just playing against a bunch of kids, although there are plenty of kids in this market. So there you have it, guys. Crypto Trend Trader with a quick update on Bitcoin. Our number one target is going to be the 200 moving averages. Everybody knows that when you break down from your moving average, you're going to test the next moving average. If you don't find support on the next moving average, you're going to continue to the one after that. And in this case, our 200s are lining up perfectly. So we break down from the 89, came back up, tested the 89, reshorted off of this failed attempt to get back above it, and then now we're expecting continuation once again. We do still have a lot of our positions open from this whole move down here, but we have been taking profits along the way at our key moving averages and support as we found it, just like you always should be doing. But you'll notice it's the same thing over and over again. We sell off from the giant FOMO pump right here. That's our baseball. We threw it straight up in the air. It's coming back down. As soon as it hits the 50-55, bounces back up, gets rejected. Hits the 89, bounces back up, gets rejected. We basically stop right here at the horizontal support breakdown right here, bounce back up, get rejected, and now we're expecting it to just roll back over to those 200s. 11.2 is the target, and then we'll just expect the same thing after that, and each bounce should get a little weaker, and then we'll finally look for some divergence or something to build. But eventually, if we're going to go by the 377 and the 528, they are going to continue creeping to the upside the longer it takes to get down to them. But at this point in time, I think it's realistic to think that we're coming down to basically that 10, anywhere from like 10.3 to 10.6. And then we can get a more accurate idea as to what's going on. And I know everybody's saying that we're just putting in another higher low right here. Well, the story is yeah, technically we put in a higher low, we put in a higher low, we put in a higher low. But these are all part of basically the same move. At some point in time, this is going to come down here, roll over, and then we're going to take out this low on a 4-hour candle close, and it's going to be very clear to the markets, to everybody in it, that we have entered the downtrend. When we got that cross on the shorter time frames between the 8 and 21, we confirmed that we're going into a downtrend. And now if we switch over to our daily, you'll see obviously the 4-hour will precede the daily time frame, and in this case that is 100% the case. You can see now all we're doing is we got wick support off the 21 multiple times in continuation, and now we came down and we got a little support, we got rejected by the 8, and now we're wedged in between the two of them. It's not uncommon that we would get one more pop-up, one more attempt to get back up here and save the trend, but really all that would be is exchanges and whales just dumping their positions now that we are confirmed that we're going back down to the downside. But in this case scenario, if we do not find support and hold this 11.550 zone and get back above this, we're going to drag this 8 moving average down to the 21, and then this is just going to, it's just like a waterfall. And obviously, if you have your shorts in ahead of time, you're going to kill it. If you don't, remember, like TLC said, don't go chase some waterfalls. Wait for the price action to come to you. Do not chase it, because that is what FOMO is. And it works in both directions, and it works in all markets. So make sure you don't get sucked into that. But at this point in time, 11,000 range right here is our number one target, and very likely where we're going to end up going. And depending which one of these moves you're going to take as the higher low, if we break through, this is going to be like our invalidation range. If we get a daily close at 11.4 or lower, you're basically going to not be able to deny that this is in fact a lower daily candle close. But in all reality, at this point in time, you really just got to expect that we're going to come down here to these key fib levels and essentially like see how strong this trend was. Can we save it? Can we continue to the upside? There's a lot of indecision in all these markets right now, and I suspect that as we get closer and closer to the election and traditional markets get closer and closer to topping out, that we will start to see these other assets start selling off as well. And I'm still not convinced 100% that we're not going to see another dump with gold and silver as well. Although I think people are starting to hedge a little more and a little more strongly. And then also because gold and silver have physical facilities required for production and distribution, as we deal with like everything going on in the world, and we start to see like a lot of the mines that mine gold and silver having to choose between one or the other, they're obviously going to choose to mine gold over silver because it makes more sense to get something worth more money that is a smaller size or out of the ground, so it costs less money or the same money or whatever to get gold and silver. You're obviously going to take the one that's more valuable. And what that's going to do is create additional demand for silver because the supply will be limited. Not to mention everybody is rushing out there trying to get their silver now because they weren't stacking the whole time when it was like $13, $14, $15, $16, $17. So now they're buying it double time at the top of the short-term trend. I do think we're going to get continuation on silver specifically. It looks much stronger than gold on the charts right now. And then also, historically, the gold and silver ratio is way off right now. We're up near like, I think it's 70 right now or somewhere around there. And we would expect it to come down much closer to like the 50 range. Realistically, historically, could get closer to like the 20 range. Or, if it really gets bad, who knows? We may see like full on like, ancient times, biblical 10-to-1 ratios, but I think that's probably pretty unlikely. I think I'd be happy with like a 40-to-1 ratio at this point in time, which if gold were to basically just hang out where it's at right now, right around $2,000, you're looking at silver in basically like the $50 range, which would be the retest of all-time highs, which I think is very, very likely at this point in time. Gold already got its retest, so at some point in time, silver is going to gain that strength, and I think this will be the catalyst to it. And please be careful in traditional markets as well, and be careful just in general with the investments and moves you make. Make sure that you have plenty of food security and that you have taken care of any high interest debt that you have. Pay off cars, pay off credit cards, whatever there is out there. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. But the most important thing to do is make sure that you have security first and then investments later. But as we do start to devalue the currencies, and not just here in the U.S. but around the world, we'll start to see like situations like what's happening with Turkey and the lira over the last like 5+ years, whatever, as we're essentially like an accelerated trend of like the weakening of the currency. Although the dollar is still obviously the reserve currency, we would expect it to stay stronger for longer. Unless all of a sudden we are able to print exponentially more than other countries. But the truth is, all countries right now are basically just printing as much money as they can in an attempt to essentially like save their own economies and economic situations. So as we start to see all the currencies around the world, devalue at an exponential rate, it's not about your currency devaluing. It's more about how fast your currency is devaluing compared to other currencies, and then also hard assets. So the most important thing to do at this point in time is protect your principal, grow your capital, and make responsible decisions as we're, in times like this, the decisions you make are going to exponentially benefit you or cost you in the future. So there you have it, guys. Crypto Trend Trader, and I'm out of here.